Hey guys, Steve Simpson here with Central Florida Property Management. Hope everyone's doing well. I wanted to just go ahead and do our Q2 2026 market update. I've got some unfortunate news in that the Realtor board Aura has gotten rid of the graphic I used to use. So I'll show you the new one they use. It's not really as helpful comparatively, so maybe I'll try to figure out some other way of doing this. So we're going to start on Redfin this month. So the good news is, I guess good news depending on the way. This price is basically flat. This was at 410 back in March, so it's basically flat. I guess apparently it's 2% down from 2025, but considering the way the market kind of feels, I was expecting this to be lower. So it's good to see that prices are kind of holding, I guess, depending on if you own or if you're trying to buy. Days on market, not surprisingly, given the time of year, is down. It was 54 back in March, so it's down a few days. Nothing super crazy. Apparently, again, it is higher than last year. So, not great news, but also not the worst thing ever. Yeah, so one thing I did find interesting here, which I knew but didn't see this before, was this: where are people moving from that are moving here? And kind of not surprising, New York and Miami are the top two ones. I was always told Miami was the #1 spot, but maybe New York has overtaken it. Anyway, real quick, moving on to the Realtor data. I guess they wanted to break it out by county, which I guess is nice if you only operate in certain counties. We mostly operate in Seminole, Orange, Osceola, and Lake. Some in Volusia, really only like Deltona, DeLand area, not out to the beaches. So this is probably a little bit inaccurate for us personally. About what I would expect. Osceola County has the highest days on market. Orange and Seminole have the lowest. Orange, obviously the largest county, so it has the most sales and the most listings. Values, this is about what I would expect. So again, I don't have a lot of comparative data on this one, so maybe I'll come back and look at this next week or next quarter for that one. All right, on to the rentals. So looking at the overall market, we are down slightly from 1950 in March. This is not super surprising to me, given what we've seen the market doing. It feels flat. I mean, $50 out of 900 or 1900, I'm sorry, is not a huge decrease. So it's effectively flat. I'm not surprised to see that based on what we've seen. Rent growth is just really not there. I'll get into some more renewal stuff later and kind of my theory on that. Overall inventory is up about 500 or 400 units from March. Again, not surprising given the timing of the market. Summertime is usually the busiest in the real estate market, both for rentals and for sales. And there are the most properties turning over in the summer, meaning a tenant's moving out and new one's moving back in. So naturally, if more tenants are moving out in the summer, you should have more properties on the market in the summer. Looking at houses, my favorite asset class, this is pretty much flat. I believe this was like $24.90 in March, so this is basically flat. Days on market is down from 55, which again is about what we expect given the time of year. Available rentals is up about 10%. I think it was around 1,000 at the end of Q1. So about as what we would expect. Rents holding steady, lower days on market, more property on the market. Not super surprising. Townhomes, a little bit strange here in terms of the graph. Let me start with this though. Rent's down about $50. Average townhome rent was $2,200 back in March, so down about $50 year over year. Again, that's basically flat, not super surprising. Days on market, you'll note, significantly higher than the housing is. Again, we've talked before about single-family homes having the highest demand. That is reflective on the days on market. The days on market for the townhomes specifically is down from 64 in March. So again, kind of on track with the rest of the market. Available rentals is pretty much flat. I think it was about 410 back in March. So basically this flat market. This thing is just funky, right? So this is the lighter blue is last year, which I think I commented last call that, just this pricing is all over the place. This one's the same thing. Looks like it drops about $100 a month in July and then picks back up $100 a month in June and picks back up $100 a month in July. It's just a weird market, and I think some of the renewal stuff we'll cover somewhat explains it. Moving on to apartments and condos, rent is pretty much flat. I think this was like 1665 or something like that end of March, so pretty much flat. Available rentals, not surprisingly, is up from 1725, so up about 200 units there. Not, again, surprising given the time of year. And it looks like this is following a similar trend line, just with the overall prices down from last year. I mean, you compare this graph, the predictive capabilities of the last year graphed charts compared to townhomes. I mean, it's a joke, right? And then houses, seems like they kind of got hot out of the gate, and we've kind of hit a plateau now. That's basically what I felt too. I think I mentioned in our last quarterly update that it felt like the market was moving a lot quicker at the beginning of the year, which it did. And it feels like it's a little bit slow right now, especially relative to the time of year right now. So this actually goes along with what we're kind of saying. Wanted to show you guys our renewals board, which I think I included in last month's or last quarter's meeting video. Sorry, it's been a long day. So basically, the showstopper here is just how high renewal rates are up, right? So if you just look at the renewal rate compared to year over year, I mean, literally every single month it's higher. Well, I guess with the exception of May. But look at June. We're talking over 75% of tenants renewed in June. And if you'll notice up here, in terms of properties turning over, June is one of the 3 busiest months of the year. Obviously, we're not through July or August yet. But basically, we have the most amount of properties with the highest renewal rate. And this kind of explains why I was looking today. The number of properties we have on the market is lower than this time last year, even though we manage about 100 more properties. And I spoke about this briefly on our last quarterly market update. I think what this comes down to is people are only moving if they have to move, not if they want to move. And that's presuming that rents stay flat. And by that, I mean that we're not trying to raise rents above market when making renewal offers. The way we look at this, I think the way most people look at this is you're not comparing, or I guess I should say the way you should look at this is you're not going to compare what maybe you're going to make on the investment year over year. If your expenses go up, you need the income to go up, so on and so forth. The way you need to look at it is if this tenant moves out, like what does that situation look like, right? So if your insurance goes up, it doesn't matter if the current tenant's paying you or the next tenant's paying you. If your taxes go up, it doesn't matter if the current tenant's paying you or the next tenant's paying you. It's a fixed cost, basically. So if the rent you're going to get from the next tenant is not materially different from the rent you're going to get from the current tenant, you are way better off keeping the current tenant. And it looks like we're doing a good job of keeping these renewal recommendation rates at market, which is leading to this super high renewal rate. I mean, just to kind of put this in perspective, historically, we've renewed about a 66% rate. So we're talking for, over 10 years. So, last year we were a little bit higher than that. If you look here for the year 69, this year we're on track to be significantly higher, call it 71, maybe hit 72. We'll see what happens the rest of the year. But I think what's happening is that I think what might explain this townhome deal is that maybe for whatever reason, if you're seeing a spike if we're assuming the overall renewal rate is going up because for a variety of reasons, economic, what have you, people are just staying put. Maybe this is all based on if there's obviously a lot lower available townhomes versus homes or apartments, right? It's a smaller denominator. So maybe what explains this townhomes, because of that smaller denominator, you're seeing a like a swing in renewal rate, if that renewal rate fluctuates, 10 or 15% month over month, the market either gets flooded with properties and the prices drop, or the market is devoid of properties because everyone's renewing and prices go back up. That kind of explains why it's kind of so all over the place. That's just my theory. I just came up with it. I could be totally wrong, but I think it makes sense. So all in all, pretty steady Eddie. Not the best market we've ever had, but also I think better than it was, a couple years ago for sure. And the advice I would definitely give everybody is be realistic with what your property's worth and try to minimize turnover, because I think we've done a really good job of keeping rents at market, and that's really all you're going to get is market rent, right? So you want to minimize your costs to keep your income up, and turnover is a large cost, between just obviously any work needs to be done on the property. You're going to lose some time in terms of vacancy loss with lost rents. So minimizing that, given that the market is flat, you're not going to be able to get appreciating rents, I think is of the utmost importance. Do you guys have any questions or comments? I would love to hear them. Please either leave a response on this video or shoot me an email or give me a call. And hope you guys are doing well. Thanks.